This is Cece. Welcome to the Orbit. It is Thursday, December 4th. We've got futures flat in the S&P 500, mixed elsewhere with the Dow futures slightly higher and the Qs lower once again to start off 2024. We're looking at the S&P 500 and the SPY. We've got an expected move today of about a 0.5%. That is slightly higher than that 0.4% number we've been seeing consistently over the last couple of weeks. So that is basically traders, zero DTE traders and market makers saying there's a little bit more volatility this week than there was last week. We'll see if that continues, especially into the jobs number tomorrow. Expect that zero DTE to be sort of the highest of the week. We've got looking at one of the reasons that the market has been lower a little bit, and this was sort of quietly happening into year end without like a lot of attention during a pretty slow trading week. But you basically had treasury yields reversing a little bit. And it's unclear whether that's the end of the trend of treasury yields falling for now, or if we're going to see some sort of like decent reversal. We're looking at TLT right now. You can see that sort of decline over the last week or so. There was a bounce yesterday, but then you can see pre-market, we're right back down to where you see that bounce on the chart. Keep an eye on that because treasury yields, and especially with the jobs number tomorrow, yields will be very sensitive to that number tomorrow, and therefore stocks will be as well. Just to give you some perspective of that, it may just be a little blip. This is the chart of the 2-year, and these are the really sensitive, the 1-year and 2-year. This is bonds, so you sort of have to mirror it in your head that that rise we see to the right of this chart is yields falling and these bonds going higher. And as you can see right in that last week, we've got this tick lower, but we've seen that even on this rally in the 2-year treasury. And it's the same as TLT. So it's not indicative yet of a change in trend, but something to watch for. Of course, the most sensitive stocks in that universe of change in treasury yields and interest rates and things like that are the small caps, of course. And you can see what's happened to IWM the last couple of days. And that would, there could be a number of reasons for that happening, but the yields story is certainly one of them. So that's something else to keep an eye on. You see this is down pre-market slightly, and it is below those levels that we were pointing out last week. We will see, you can see that gap higher on the left. We'll have to see how much of that gap this fills lower. Or, of course, we could see a turnaround Thursday and everything reverses higher today, which would mean that that was somewhat just start of year stuff and not some overall trend changing. We were talking about the Qs lower, and mega cap tech has not had a great start to 2024. And of course, Apple is at the center of that. It's had a couple of really rough days and it is down again pre-market 1% again. Watch for this one. Does this continue? Does this follow through lower today, or is there a turnaround Thursday? And finally, looking at the Qs, we've got them down about 0.4%. The expected move today is 0.6%. Again, that is higher. That we've been seeing about a 0.5%. Keep an eye on that expected move, that zero DT expected move. Does it start to expand day to day? When you start to see it get a little bit more exciting, where traders are expecting a little bit of volatility in some of those big intraday swings or bigger, you would see the Q's expected move probably closer to 0.8%. So that's something to look for. And obviously at very high levels, it's up above 1%, but we're nowhere near that. But it is zero DTE expected moves are starting to pick up a little bit. Now, talking about, looking at this chart, and if you were just the type of trader wanting to time a reversal in momentum and you were thinking that the first couple of days of the year does not a trend make and it's just some sort of start of year selling, and you're looking to play and position for Qs to go higher, or if you were one to think that this is a follow through and this is, the Qs were up 50% last year. They've got, if they continue lower, if mega cap tech continues lower, it's got some room to go lower. What's interesting is just going out to like the end of January, you can see where this is the expected move on the chart at about 386. You can even call it 385, and then of course 410 or 411 or 412 to the upside. Um, this is an interesting expected move because you see that on the chart and making trades to those different levels. So let's have a look at debit call spread and a debit put spread. So first, let's look at the debit call spread, and this is of course not saying do it right now. This is the type of trade that you would, once you think that that momentum has changed and you might see an intraday reversal and the Qs start to go higher, and then giving, of course, giving yourself enough time. So here's a 398, 410. We're looking at about 450 to make 750 for the Qs to reverse higher by the end of January to 410. Of course, on the chart, that's not much of a move. That is, what we've seen over the first couple of days of the year lower. So that's an interesting way to look at that is if there was a reversal, giving yourself, essentially 3.5 weeks for it to play out. Now let's look to the bearish side, and the put spread does take you down to we've got those weird strikes because of the Costco special dividend, but takes you down to, let's say, the 385 level, 398, 385, let's call it, costing you about 400 to make up to 900. So that's a good look at, looking at our Q is going to fall. And again, that's the type of trade that you might wait for a green open to put on if you were bearish over the next couple of weeks and you think January is just going to be kind of a wipeout for some of these big mega cap tech names. Is there is some selling because of the massive gains in 2023. Maybe that's the type of trade on an up day to play for a reversal and a continuation of this trend we've seen over the first couple of days. So anyway, the volatility is still low, both near term and long term. And from a trading perspective, you see a little bit of volatility like this that we've been seeing in the Qs and IWM, even a little bit in SPY, and some trading opportunities if given the right timing and given enough time for it to play out is starting to happen in the market, as opposed to what we saw over the last couple of weeks of December, which was basically just a grind higher or sideways moves.